Okay, just double checking. Okay, now we've got some volume. Apologies for that. So it looks like we haven't had any volume for this stream, but now we are back in business. So what we're looking at here is the data set. I'll just quickly recap the data set for most of the investments that we will be making. This is the weekly, so welcome to the weekly call for Discover Done, where we cover all of the investment decisions we make, why we make those decisions, the economic trends that we're following, and how those influence the decisions we make and how much profit we make as well. On the screen here, you can see we have the NASDAQ index, which is the main stock index we've got going up here. And then we've also got the TLT Treasury ETF, which tells us the long-term Treasury, what the long-term Treasury bonds are doing and whether they're going up in price or down in price. On the bottom here, we've got the Fed funds rate overlaid by the inflation rates, both the core inflation rate and the general inflation rate. That will tell us how the Fed is responding to inflation. And then secondly, we have the unemployment rate. These are all figures for the US because the US is primarily where we target our investments. We can see we have the unemployment rate here, and then we've got the weekly average unemployment rate here, which gives us a little bit more of a quicker snapshot of what's happening with the economy. We've also got, we can unhide that here, the non-farm payrolls. So this tells us how many jobs are available in the economy and then how many people are employed in those jobs, right? And that gives us a really good sense of the employment situation in the US, which we can currently see the jobs are trending down and the inflation is trending up. So the the unemployment rate is trending up and the roles available are trending down, which is what you would expect. And this tells us that we're on the way into a recession. If this continues, we'll see the unemployment rate increase and the jobs available, so companies just cutting jobs and not having work available for people. So as more people become unemployed, they spend less in the economy, which means companies make less profit and the stock market would decline. Conversely, as the stock market declines, people would move their money from the stock market into the bond market, which is the white line here, long-term treasuries. So we could expect to see the treasuries rise during a recession. And you can see some of those examples here. If we scroll back a little bit, okay, if we go back to, let's say, COVID, you can see as the stock market declined heavily, the treasuries just took off through the roof, right? And we'll look at another example. The 2009 financial crisis. Have a look, we'll just scroll back a little bit in time. So here you can see 2009 financial crisis. As the stock market plunged, people were afraid. They withdrew their money from the stock market and poured it all into US treasuries. And you can see it spiked through the roof here. The moment the stock market started to recover, treasuries were sold off again and the money redeposited back into the stock market. So those are some of the really common trends that we're going to be looking at in our investments, and we're going to be taking most advantage of during our times here on the weekly call. All right, so what are we looking at the moment? So in terms of investments, we can see that the NASDAQ has been trending up a lot. The treasuries has been going sideways, but the employment situation tells us that as jobs are decreasing, you can see the non-farm payrolls here, and as the unemployment rate is increasing, as you can see in the red the red lines here, we expect that the economy is deteriorating. So we want to be rather careful on our stock market investments here. However, we haven't hit our inflation target yet. So our inflation target is 3%, which we have hit, but also for the Federal Reserve to start raising their federal funds rate. So at the moment, they are still lowering their federal funds rate. So we're keeping a very close eye on the next announcement. Is that going to drop further, or is that going to remain steady where it is? If we find that the federal funds rate is starting to be raised by the Federal Reserve in order to slow down inflation, we know that is going to slow down the economy, which means unemployment rate will increase, and we will be very quickly moving any money that we have out of the stock market in preparation for the next downturn. And that's where we make our big money. So keep an eye out for that. That could happen anytime in the next couple of months. I expect that something to break over the next sort of 6 to 12 months, but we'll keep you posted here. So that is our main economic review for our strategies. We'll also have a quick look at the trading economics. So this site is an amazing site to just give you a quick glance over all of the economic news in the world. So I always look at this every week just to have a sense of what's going on around the world. It also tells me exactly what's happening in our range trading markets, which is another component of our Discover Done investment strategies. For all of our range bound investments such as oil, wheat, most of our commodities, we can see what they're doing here, and we can then reflect that to our strategies and how much investment we place into those. So let's have a quick look at oil. As we can see, there's a big mention of oil here, so we can see that oil futures has been falling a lot. If we look back in the last 10 years, so from 2022, it's actually been declining. It's sitting on about $60 a barrel, which is relatively low. You can see that it can go up to $120 a barrel in 2022. If we go back a little bit further, okay, we're on a free plan here, so what we can do is we can have a look at trading economics. If we have a look at our oil trade, yep, and we'll just quickly